Silver's got it has potential to have a decent move. I mean, it could actually pop and rally to, if we were to go all the way back, I think it could go spike up to that $50 mark. I think we could potentially see it pick up speed in the next month or two and shoot up and try and hit all-time highs. I think gold will rally at the same time. Miners, silver is really difficult. You just never know when it's going to have one of these explosive parabolic moves and shoot up. It has a lot of energy built up. It's a small market. A lot of people are watching it, accumulating it. And when it starts to run, it becomes a very crowded trade very quickly, which is what drives it up. At this point, I mean, I see it going to about $41 an ounce, but depending on how this unfolds, I think we could see a much bigger explosion to the upside. And it might have a blow off phase where we go right back into this 50 mark. And this will probably be exactly what you said, David. When gold and silver have that spike up, that's usually also when they come straight back down. So I think this will be that blow off spike move that puts a top in gold and silver temporarily. And then we potentially start to see it sell off.
In today's news recap, Fidelity says the gold bull run is far from over. Despite already putting in a strong performance so far this year, Ian Samson, multi-asset portfolio manager at Fidelity International, is confident gold's bull run can hold on over the long term. Having risen 27% in 2024, he noted the asset class is already up 28% over the year to 25 August, making it one of the best performing asset classes in Fidelity's multi-asset portfolios. However, rather than dial back any exposure to the yellow metal, Samson said a mix of falling interest rates, sticky inflation, and subdued growth should all bolster the prospects for gold going forward. It should lead to a subdued dollar, which is gold's main competitor, as a safe haven and store of value, he said. We have never seen this scale of uncertainty and change around tariff policy, and the effects are yet to dissipate. Gold's status as the ultimate safe haven leaves it well placed for any further surprises. In addition, the unrelenting size of the U.S. budget deficit raises concerns about monetary debasement, which further boosts the long-term case for gold. Multiple countries, including China, India, and Turkey, are structurally increasing their holdings of gold in a bid to diversify exposure away from U.S. dollar, he said. Gold has long been a store of value and a diversifier, without the credit risk associated with paper currency reserves. More broadly, gold supply is very constrained, meaning even a small increase in portfolio holdings could move the dial. For instance, if foreign investors decide to move some of the $57 trillion they currently hold in U.S. assets, gold is a likely beneficiary. For much of the year, this had been through a combination of passive instruments that track the gold price directly and through a selection of gold miner equities. He said the latter has outperformed in the last few months, and we have taken the opportunity to book some profits, but retain exposure to the gold price. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
I actually covered this morning with subscribers that we're in this short-term downtrend. It's been kind of trading sideways. And what I find gold and oil like to do this a lot. They create this, what I call a little hook. So a lot of people will be building a bearish pattern or a position expecting this to go lower. But what happens is you have a little bit of a hook up. Price starts to break some of these recent highs. The shorts start to get nervous. They're on the wrong side. People also start to get bullish and they buy, and it creates a green bar up. And then what it does is it gets the shorts out, spooks them out, gets people long, and then of course it sells off afterwards. We saw something like this several months ago. We sold off, it started to put in a consolidation, and then boom, it has a short squeeze, a little bit of a pop, a hook up, and then it goes back down. And so the markets are really good at doing this. I don't see this being a strong move up at this point. I think it's really just a little bit of more of a trading play. if we zoom out on the chart and we draw a line across like major resistance through here, price is kind of still stuck under key resistance. And you and I touched on this in our last talk, this big spike up here. I think it was news driven. It goes up for a couple of days. Everybody chases the news. They feel like they're getting left behind. And then it rolls over and takes all their money, whoever got long chasing it. And so that has to be negated. Just forget about that news driven pop. And oil has fallen right back down into the downtrend under resistance. And it might still want to go a bit higher, but I think it's just a bounce within a downtrend. I really like gold. I mean, gold has done many of these where, it has this big rally up and then it consolidates for months and then has a rally, consolidates for months, has a rally. Gold has been warning us for a long time. It's a top performing asset long term. It's near all-time highs. It has a very strong bull chart, a bull flag pattern that points to about $4,100 if this move plays out, maybe even a whole lot higher. But gold is warning us that something is wrong. The fact that it's holding its value and going up long term here is the sign that people around the world are nervous. And I think, gold, sometimes the market, there's a couple sayings. Sometimes the market will, if it can't shake you out, it will wait you out. And that is what it's doing. People are starting, I'm hearing some technical analysts getting really bearish on gold, saying that gold's about to fall, it's going to have a big drop, which I do think will happen, but not until the economy and everything turn over and we potentially go into a stock market, a bear market. I think that'll pull gold down. But it's funny.
A bear market will pull gold down.
A bear market in stocks will pull gold down eventually.
In today's news recap, Chinese insurers put pressure on the gold market. Chinese insurance companies are about to detonate a bomb that could have a profound impact, especially on the gold market. This bomb was already set off in February 2025 when the Chinese government, through its Insurance Regulatory Authority, issued a new regulation requiring the country's large insurance companies to hold at least 1% of their assets in physical gold. 1% of assets may not sound like too much gold that now needs to be purchased by insurance companies. Initially, not all companies are affected, but only the country's largest insurers. However, this is only the first stage of a multi-stage plan. The next stages envision gradually increasing the number of insurance companies affected by the regulation so that eventually all insurers will be included. The percentage of managed funds that must be invested in physical gold is also expected to rise from 1% to 5% in the medium term. A massive rush from the Far East for the world's gold is slowly but surely brewing. The decision by the Chinese Insurance Regulatory Authority has far-reaching implications, as it will redirect billions of US dollars, which have predominantly been invested in US government bonds, into the gold market. The immediate consequences are already significant, but even more dangerous are the medium-term effects that this decision has or could still have. Since decisions of this magnitude in China are not made on a whim, but are approved by the highest authority, we are dealing here with another facet of China's strategy to detach itself from the US dollar and the Western financial system. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Because of the selling pressure, the mass liquidation, and we saw this in 2008, once the stock market starts to pick up a lot of speed and sells off with huge volume and panic, gold usually gets sold off with it. But before that happens, gold usually shoots up. It'll go higher for a little while, for potentially a month or two, as the stock market starts to sell off. So I'm not really worried about gold. Right now, though, there's no doubt it's gone sideways so long, people are giving up on it. They're starting to go bearish. They're moving into gold miners because they're like, I need to get into something that's moving. This is right. Gold is boring. And silver is starting to move and break out, right? And so people are moving away from gold. That's usually a sign that gold's about ready to actually make a move. So I like gold and silver. And I do think they have potential for 1 to 2 months upward movement. And I think it could be, 20+% for both of them, which would
I want
put
to talk
silver
about.
up near $50 an ounce.
Wait. Sorry. When's that going to happen? This year? Next year?
I would think it's going to happen this year. I mean, I don't know for sure, but the chart pattern is
Right.
based on it should have it should start to happen pretty much any week here. It should start to break out and start to run.
I want to talk about silver and finish off on silver in just a minute. But before that, I have two observations on gold I'd like you to comment on. So first of all,
Okay.
on the analysis that people have that, this is about to break down to the downside because it's been consolidating for so long. Typically, that's not what happens to gold. If you just take a look at the chart historically and zoom out and take a look at what has happened in the past, whenever gold has stalled for months or maybe even years on end, typically what happens is it breaks out to the upside. A few notable exceptions is 2011. And 2011 was an exception because gold has typically only fallen when it's just spiked up and then immediately fallen. So then this isn't really a consolidating pattern because in 2011, it's gone up and then immediately fell. And then a multi-year consolidating pattern led to a breakout, as you can see here. In 2022, this is what you were talking about. This is the second observation. In 2022, when stocks go down, that's when, if there's a lot of selling pressure overall in the markets, that could bring the gold down as well. That's what happened to gold in 2022, went down 20%.
Yeah.
So I'll let you comment on both of those things.
Yeah, I think you're right. I think right where we are in gold right now, where it's been consolidating. I think it's very close to popping. In fact, if we were to go right over to 2007, gold went sideways for many, many months. And then suddenly, just as the stock market was starting to roll over, gold shot higher and it rocketed up about 37%, something like that. And so this huge pattern is like exactly kind of where we're at right now when we look at gold. It's had this big run up. It's been trading sideways for months. And I think we have one more big push. And I think you're right, David. I think, it is a pause and consolidation at this point. You have to expect it to go higher. To me, I don't see anything bearish about this chart pattern. It's, it really is pointing to higher pricing. It's kind of it in a nutshell.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.